Let's get straight into it. We've seen weakness filter through to the local unit this morning, and of course it's all on the back still of what we're seeing emanating out of the EU, and that putting risk aversion back on the table more so than anything else.
Yes, yesterday we saw the rand weaken on the back of the fact that it was dragged down by the unresolved crisis in the Eurozone, and we also had very uninspiring data coming out of the US. We do believe that the markets will continue to be preoccupied with the developments coming out of the Eurozone today, especially given the fact that there's a meeting taking place with the finance ministers which commences this morning, and that's really ahead of the EU summit going ahead during the course of the weekend. We do see that, we do anticipate that given the lack of the conviction and the unresolved crisis in the Eurozone, and the fact that there's differences amongst the Eurozone's largest economies, namely France and Germany, that sentiment will remain nervous. And because of that, we do anticipate the rand to remain weaker today, and especially if we don't see any firm resolution coming out of the Eurozone summit later this weekend. We expect the rand, if it continues to breach 821 to the upside, we could possibly see a move towards 830 going into next week.
Let's take a look at the euro-dollar cross at this stage, Shireen. Given the fact that we've been talking about the rand being influenced by global factors as opposed to local fundamentals at this stage, what's your outlook on that euro-dollar cross?
Well, we did see the dollar strengthen quite a bit yesterday, but on the back of the fact that the Philadelphia Fed Manufacturing Index did increase quite considerably, as you mentioned, to about 8.7 points in October. But we did have some uninspiring data coming out yesterday. We had the existing home sales data come in slightly softer, as well as other indicators, the leading indicator, which also came in slightly softer. So we could see some kind of pressure come through later next week should data continue to come in a little bit weaker than expectations. But we also have to bear in mind that given the fact that in August we had pretty bleak data coming out, and expectations really were adjusted to the downside, and because of that, even though the data has come out as slightly more mediocre than expected, it still seems a little bit better than what was previously priced in. So I wouldn't really expect the United States to really show any kind of or robust improvement over the coming weeks. We still see some that they pretty much on tenterhooks with regards to where the recovery is going. In
that context, we've got the trade wars continuing between China and the US, and looking at reports this morning, I've come across reports saying that China is set to show the world that its currency policy begins and ends at home, the slowing down the yuan's appreciation to shield exporters from a global economic downturn and show US lawmakers that they cannot push the pace of reform. What are you making of all that's playing out between those two territories right now?
Indeed, the currency wars are quite pertinent at the moment, but I think China, what is quite important at the moment is that China's economy is also starting to slow, and that they are concerned about where that is going. We did see earlier this week that the GDP numbers came in at 9.1% and were softer than what expectations are. And while it is quite a robust number, they are quite concerned about where the economy is headed and whether we're going to see a hard landing or a soft landing. And I do believe that because of that, they are looking for a stable currency to try and get their economies more on a stable footing. We're also seeing that they have indicated that they're not going to lower interest rates any further, and that they're likely to only lower it once inflation hits towards the 5% levels, currently at 6.1. So there is still some concern about where the Chinese economic recovery is going, or whether they're going to rather going to see a soft landing rather than a hard landing.